Welcome to My Hometown, the program that explores clubs, organizations, businesses, and issues across Nassau and Suffolk counties and sheds light on the different towns that are making a difference.
Hello and welcome to My Hometown. I'm Bill Horan, along with my co-host, Stacey Rain.
Bill, we are in the middle of finishing up, or maybe for some of us, starting to do our tax returns. Have you started, Bill?
Well, we have till April 15th, and I don't want to say it, but no, I haven't started.
We're definitely not done. And so I know that I'm interested in knowing more about tools and tips so that we can maximize our refund, which is why we invited local tax pro Bonnie Yam, owner of ATAX, a tax office in Bellmore, to give us the details on how we can save some money.
Bonnie is an enrolled agent, and besides taxes, she is also an expert on finance, insurance, and even Medicare. Bonnie, welcome to My Hometown on the voice of Nassau Community College, 90.3 WHPC. Bonnie, start off and tell us a little bit about yourself and why you wanted to become an expert in taxes, of all things.
Like what you said, taxes. Everybody has to deal with taxes. The government wants some of this back from you, right? But it's like a very interesting government. The way that I structure taxes is always to benefit the needy group. And then the areas that they want to see the most growth. But a lot of us, get like really, really distracted by all the tax rules. And every single year they change it a little bit here, a little bit there. It's so confusing and very stressed because if you owe it, they add penalty, they add interest, and they keep compounding. So,
and they seem to know how much you owe, but you don't know how much you owe, which I find very confusing, right?
Well, you can go online. Actually, there's a link I can share with you.
Yeah.
But here's it. The story is like, we started filing taxes for a lot of people already. Some of them, got lots of money. Some of them got less money. Mm-hmm. But there are certain things, that we want to share. What we want to say is like the credits, the deductions, and the credits. How you manage to maximize the amount that gets back to you. So some of the popular credits I like to be able to cover in today's session.
I'm looking forward to that. So, I know that taxes are scary for people. Have you found that in your work? Can you tell me why you think taxes are so scary?
Number one, I don't want to pay the government. They pay so much. Yeah. I want some of it back. And the other thing is, like, if I make a mistake, they send me a huge bill. And then it can really compound very fast. The interest, like 15%, it keeps doubling and whatever. Mm. And and if you don't pay taxes, they can levy your salary and the bank accounts, So that's, and then if you want to apply for a job, when all this stuff is going on, you're not going to be able to find a job. So you have to clean it up. Yeah.
I didn't know that.
So
I know I'm scared. I'm always afraid I'm going to forget something. I start putting my paperwork together, but I figured no matter how much I have, I'm going to forget an interest on a bank account or something else that I should provide to the tax preparer. And I'm going to, as you said, mess up. And then 8 months from now, I'll find that I owe them.
Well, let me give you an example. Like, let's say you do a little part-time job, and instead of giving you a W-2, they give you a 1099. 1099 means that you are the sole proprietor. And if you are sole proprietor, that means you have to pay payroll tax. So if you don't know how to do taxes, you just add all these things up, W-2, 1099, and just put it lump in one number. They said, when they go researches, this is not W-2, that's 1099. So where is the payroll taxes? I can't find it. Then you get a bill. You had no idea. But you get it like something that you filed 2 years ago. So tax and interest, and you don't know what's going on. I don't even know how to research because you're not a tax expert. So you don't know the difference between W-2 and 1099. That could get you in trouble.
That's why we need you. And that's why we're doing this interview today.
That's what we find out, from doing these taxes.
Bonnie, tell us about some popular tax credits.
Sure.
What should we look for?
Okay, so let's say if you have 2 kids, okay, if you have dependent, you get like $2,500, okay, for each kid, okay? And if you have 2, that's $5,000. And then one more thing a lot of people don't know is dependent care credit. So if you hire a nanny, okay, or if you send the kid to like summer school or day camp, okay, not overnight, okay, you can get the money back. And the total amount they can get back is $3,000. But it's, of course, like, make it more complicated. It's subject to your AGI Okay. And then not 100% of its deductible. It's 35% of how much you've spent, let's say. So, but then, if you spend a lot of money, you can probably add all that's up to $3,000. So you have 2 kids. Okay. So 3,000 plus 3,000, 6,000. And then dependent credit, 2,005, 5,000 plus 6,000, $11,000.
Wow.
Now, Bonnie, you used the term, and before Stacy asks her question, I'm just going to interrupt for a second and say, what does AGI mean? You said AGI.
Okay. Very good question. This is, I really should go over that. Okay. You started with the income. Okay.
Right.
Income. After that, you have deductions. Deductions is a lot of times depending on the status. So head of household, married file single, married file joint. Okay. So married file joint is normally like about $27,000 for this year. So if I make 100,000 minus 27, so it's about 73,000. That is your AGI. Okay. And there are other deductions such as if you invest in 401k, pre-tax dollars, that will lower your income a little bit. So minus all these deductions, your income minus all these deductions would be your adjusted gross income.
Okay, adjusted gross income.
And then that adjusted gross income, you look at the tax table and see how much you owe. Okay, and then this is the amount that you tax owed, and then you got lots of different types of credits if you're eligible, and then that lower whatever you owe to the government. And then 2 different types of credits. Very important. One is refundable and the other one is non-refundable. Refundable means like if the credits that you got back is higher than what you owe the taxes, you will get money back from the government. That's refundable. That means like if I get more credits, okay, then I will get positive cash flow from the government. But non-refundable means that if I got more credits that I can use to offset my taxes, I don't get any extra money back. So of course you want refundable credits.
That's what we were looking for. Okay, magic term. I'm going to mark that refundable credits.
Yes, but it's pretty complex. Sometimes they said, okay, let's say $2,500. Maybe just $500 is $2,000 refundable. 500 is not refundable. They make it pretty complex.
That is that's why very complicated.
You need to use a calculator or some tax software to help you formulate it.
So you were talking about the tax credits available for like dependent care, but I also heard that there may be additional tax credits for people who have kids going to college, like here at Nassau Community College.
Yes.
So can you explain that a little bit?
American Opportunity Credit. Okay. So it's like 2005. Okay. But they make it complicated. The first $2,000 is dollar for dollar. Okay. And the next $500 is 20% off the amount that you spent. So basically, you have to spend $4,000 to get $2,500 back. Okay. So, but it's still pretty good. A lot of people spend more than $4,000, right? Okay. So if you have 2 kids, $5,000.
Hey, Bonnie, it sounds so easy, but is that meaning like the tuition? Because
tuition, textbooks, not living expenses. Okay. Technology is okay too. So anything that you use that you pay expenses incurred in the school for studying, but not living and transportation.
That's still a nice number. I mean, because that's easy to exceed $2,500.
It's easy.
And if we can get over that, and with most colleges,
you $4,000 to get $2,500.
I'll take it. That sounds good.
Yes,
we'll all take it.
Yeah. And on top of that, if you have student debt, you can write off $2,500.
Oh, wow! These are a lot of little hidden gems you're giving us, Bonnie.
A little bit there, and lifetime learning credit. Okay, what's that? Just a little different. Like for American Opportunity, you want like a full-time student, okay, at least half-time, okay? But for lifetime learning, you don't have to be even half-time. You can take like for adults, okay, if you want to like, get another whatever to advance your career, you can get up to $2,000, okay? But you have to spend like $10,000 to get $2,000, so it's 20%.
So that's not, okay.
Yeah, but still money, okay?
Right.
Still nice. And if I'm hearing you correctly, someone going for a master's or going back and taking extra credits for a certificate?
Yeah, you can, but that's not even, you just have to like authorized institution. Doesn't have to be master, okay? So just an official organization that provides,
Wow.
That's great.
Yeah. So any type of learning doesn't have to be towards that.
You guys are
specific.
teachers in the school. $300 for teachers for supplies.
Oh, nice.
Oh, nice.
Okay.
Okay, so husband and wife, both teachers, $600.
Win-win. Okay.
That's good.
Yeah.
We
Well,
like
that's
that.
it's nice that
And
they know
a
that
little
teachers
bit
are
helps.
Yeah. Well, it's nice that they know that teachers are spending their own money sometimes.
I know that. I do know that. Yeah.
Bonnie, can you tell us, I heard a term called earned income
Oh,
credit.
you really should know. Okay. Earned income credit is kind of complicated because it's dependent on your AGI and how many kids you've got. Okay. So the amount that's given back can be $6,000 to $7,000 depending on how many kids you've got. Okay. And then you satisfy the AGI requirement. But the AGI is not what you make. It's what you make after the tax deductions. So tax deduction is dependent on if you married files jointly or single or head of household and all that. So that can be 10 something, $15,000 to $27,000. So let's say you make $100,000. Okay. After you deduct 27, you get 73. Okay. Mm-hmm. It's still too high. What can I do? Okay. So this is a little tip I want to share with you guys. If you open an IRA, $6,500 for one person, two people, 13. And if you're 15 and above, add one more $1,000 each. Ha 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 ha. So you managed to meet that criteria. $6,000, $7,000, depending on 2 or 3 kids. Why not?
Yeah, that brings it down a little
Yep.
bit, right?
This is exciting. You're giving me a lot of numbers here. This is great.
But you know what I mean? If you're just missing by a little bit, a couple $100 or $1,000 or even $5,000-$6,000, there's a way out. And you know what? When you file your Roth IRA, no, it cannot be. It has to be traditional because Roth is after tax. Okay, so when you do this IRA investment, you can have all the way up till you file your taxes, so you can still do it.
Yeah.
So even though we're in the tax year now,
Yes,
2023 is
223 passed.
done, we can do it.
Yes, you can still do it.
Okay, we can still do an IRA.
I don't think a lot of people know it, but
No, you see my eyes getting bigger. This is really great. And
right.
I'm excited
If you talk about
this.
$5,000-$6,000, it's a lot of money. And
Yeah.
normally, after you file your taxes, you get it back in three weeks.
You're making us rich. This is good. And I think for everybody.
I am telling you, I'm seeing
Already,
it. It's
you
actually true.
brought out a lot
Yeah.
of things I
Yes.
certainly didn't know about,
Yeah.
and this is good.
we help people, get back like $14,000. Like
Yeah.
a mother, 2 kids, head of household,
Those are nice numbers.
somebody who doesn't have a lot of income.
Right.
Yeah, like what I said, dependent care and then dependent.
Yeah.
Yeah.
I've been taking notes, Bonnie. I've been taking notes. I feel like I'm in a little tax class. So this is good. So I'm a small business owner. So what should people like me, or what are some tips for companies and small businesses? What do we need to know?
Okay. So if you have a kid, one way of doing it is hire a kid. Okay. So if the income that the kid receive, if it's under, it's actually $13,850. You don't have to pay any payroll taxes, and you don't have to report any taxes. Anything under that, is zero tax. So if you make whatever, minus 13 something, you're basically lowering your income that's reported to IRS because
Yeah.
it's expenses. Of course, you're giving it to your kid.
Right. So that helps. Yeah.
This really is great. I mean, there's so many tips. And of course, this is why we're all afraid of it, I think, because there's so much going on. We need someone like you who knows it inside and out and knows where to look. I wouldn't even know where to look.
Like the dependent care credit, they ask you questions like how you're spending. So this is the worksheet. So you need to go to, I won't say an expert, but you need to have like process and document everything. Okay, so what did I spend it on? When did I spend it? And all that. And then maybe IRS won't check on you. If they do, you have it all there.
Yeah. I mean, it is really complicated to do taxes.
It is. Yeah. It is
kind of
complicated.
mind-boggling.
Yeah.
So what about, what do we need to know about retirement plans? I know we talked about the IRA a little bit. Is there anything else we need to know about?
Well, it's all about saving, and that let's put it this way. Okay. Let me explain the different ways of taxation on the retirement plan.
Okay.
There's pre-tax. So that means like when it goes in, you don't pay taxes. When you take it out, you pay
Right.
taxes.
Yeah.
Okay. That's traditional. And there's Roth, which is you pay tax first. And when you take it out, all the income and the gains. no
Oh,
tax.
so that makes sense now. Okay.
So it's
got
a
it.
little different. But they always tax you either before or after.
Right.
So you got to be smart. When my income is low, you do Roth.
Yeah.
When I have a lot of money and my tax rate is very high, I want the deductions now. And then you grow a huge sum of money, like $1 million, $2 million, whatever. And at retirement, do you take all that out in one lump sum? No.
No.
Okay. So depending on what your tax rate is. So if it's high, I take less. If it's low, I take more, right? Makes
Yeah.
sense. So you do it like a very calculated way of doing it. Yeah.
You have this all in your brain too. I mean, this is amazing.
Well, you have to know a little bit of math to
Yeah.
smart the government.
This is why she does taxes, and we take our taxes to Bonnie and say,
Right.
"Here, please do them and help us out and get through here." So
It must be kind of fun too. Like it's almost like a little game you're playing, right? Just let's
It's
see
kind
how
of a
low we can
puzzle,
get this. Yeah.
Yeah, when you figure it out, you smile too.
Yeah, right? And then you make that phone call to your clients and you say, look at this. That must be fun.
Well,
That must be a good one.
when we did it the first round, okay, and if we see all the red numbers, of course we know that the client won't be very happy. So we go through the like little credits 1, 2, 3, 4, 5.
Yeah.
We'll see what fulfills. And then if it fulfills the criteria, then we talk about it. It's like, can we make this happen? But you need to do X, Y, Z before we file taxes.
Now, Bonnie, how about a family, let's say, health expenses, and just, I guess you'd count in drugs. If you have older members who might have to take drugs or go into the hospital for even a small operation, a procedure, as they call it. Is there any benefit tax-wise to that?
All right, so that's a very complicated question.
Way to go, Bill.
Well, make the answer simple. So you,
Okay, so let's since we're talking about IRA and all that, so let's talk about health savings account. Okay, that is a triple HSA. That's a triple tax free account. Okay, I call it triple tax free because with Roth or with traditional, you either pay tax before or you pay tax after. Okay, but the accumulation part is tax free. But with HSA account, triple tax free means going in no tax, growing no tax, coming out no tax. So I don't think there's any other way that is so great. Okay, so that means your money is like really the best way. Growing very fast without having.
I'm sorry, but I'm going to again interrupt and ask you, what does HSA mean?
Health savings account.
Oh, it does mean
I've done
that.
this
Okay.
before, so I knew
Health
that
savings
answer.
account. So
I
you
feel
Well,
very
get your
smart right
notes.
now.
Yeah, so if
Stacey's
you have
taking
extra
notes.
money, and then we all know we need medical expenses, so we should do that. Okay, so it's like annual savings amount is $3,850 for one person, double that for a family, and then add $1,000 if you're 55 and above.
Okay.
All right. So that saves us
Those are
something.
limits for.
I want to take a minute to remind our listeners that you are listening to My Hometown on the voice of Nassau Community College, 90.3 WHPC. I'm Stacey Rain here with Bill Horan, and we're getting tax information from a local tax pro, Bonnie Yim, owner of ATAX, a tax office in Bellmore.
Thank you very much.
Bonnie, I know that you work with Medicare planning. So what do people need to know about that?
Medicare, I think you should just call me.
Can't even give the tips, right? You just got to give a phone call.
You know what is? It's locational based. It also depends on what meds you take, what kind of medications you take, and the doctors that you're seeing. And a lot of slightly older people, they have different needs. Like some people have like hearing or eye care, okay, or they need like wheels, okay, and maybe somebody to bring the food over to them, and then maybe they need some dependent care too. So it's pretty complex. So it basically you need a software, type all this in, and tell me where you live, and then I give you the top 3, whatever it is, and then I say which one do you think will work best for you, and then also give you some of the benefits. Nowadays, the Medicare benefits, some of them can even help you pay for the Part B.
Oh, okay.
Yeah. So, and also they will help give you like $50, whatever. I wouldn't say Amazon coupons, but CVS coupons. So you can buy like non-pharmaceutical.
Yeah.
But like,
Some of the things you need to help with
exactly.
your healthcare. That makes sense. That makes a lot of sense.
Bonnie and Stacey, one of the things, the message I'm getting from you, that if someone said to us, if you come over to the parking lot just outside the building, I'll give you $250 just to answer a few questions, a survey or something. It seems that if someone comes to you, there's a lot of money on the table that probably most of us are missing, to be honest, because you do this every day. At best, we do it once a year, and we probably do it incorrectly, and we get nervous, and we forget something. But that's why people need a pro like yourself. And once again, just tell us, where is your tax office?
2596 Merrick Road, Bellmore.
In Bellmore. It's called ATAX, correct?
ATAX, yeah.
Easy enough to remember. And, of course, our guest is Bonnie Yim. Bonnie, I always learn from other people's, or I try to, from other people's mistakes. What are some common errors or maybe deductions that we miss that people should be alert to that they probably see every day and yet forget? Uh-oh.
That laugh.
That laugh is, that's
I
like
know
when they
something's
find
coming.
the gun.
Well, okay, so let's get back to the 1099. Okay, somebody has to file the Schedule C because it's a non-employee. You basically a sole proprietor. So if you have to pay for Medicare, you have to pay for payroll taxes. How can you lower the amounts? So I would say if you're running your own business, what are the expenses? Think about that. Okay. Maybe home office, maybe transportation, maybe meals, whatever. But you have to keep track of it, right?
Okay.
Otherwise, how do you deduct?
Yeah. Yeah.
And then like the child care. Okay. So child care expenses. So if you don't even know how you're spending, where you're spending, how are you going to deduct it?
Right.
Or you own a real estate property, okay, and you rent it out to whatever, okay, and then you got income coming in. Of course, you deduct insurance, you deduct mortgage interest. What about repairs? I mean, you need to keep track, a lot of the expenses.
So how do you uncover this with your clients? Do you just sit them down and say, okay, how many kids do you have? What's your businesses? What's your, like, how does this go about with you?
Well, if it's a prior client, then I look at the prior taxes.
Yeah.
So that's, where I go. Okay. And then when we do the taxes, when I see there's, well, kind of like when they're owing taxes, and you look even more carefully, like every single line item, is there something they forgot, something they missed out, and then try look at all the more popular deduction items.
Yeah.
Well, I mean, also sometimes we do scenario studies too, for convenient. Well, I mean, the client will come in and say, I want to know, can you do a scenario study for me, married, file, single? I mean, they're married. I mean, they're actually still living together, okay? But I don't know why they want to do married files separately, because the deductions is lower. But for whatever reason, so tell me, if I file married file separately, married file jointly, what are the tax implications? And then the other thing is like, you this is not to tell you to do it, but
Give us the tips. Give us the tips.
Dependent care. So can you bring your parents in? So long as they not like they don't have very high income, there's a certain amount, okay? And then you pay for most of the expenses, okay? So you can bring in another person.
Yeah.
Be a dependent.
I'll have to make sure my friend down the street knows that. Her
Exactly.
dad just moved
or maybe
in with
you
her.
have a little kid out there. There's
Yeah.
nobody to go to in the home to adopt them.
Now, Bonnie, if you talked about itemizing expenses, but let's say they forgot to do this last year or did a poor job of it, and they're just listening to the show, and, oh my gosh, I should have done it. Are there standard deductions they could take that would be safe, that if they had a small business going from home, maybe they're a real estate agent, they work from home?
But it's very low, though. It's like $300, It's dependent on what percentage. You can only deduct X percentage. I don't remember exactly. Maybe 30% of the whole house, and it's the amount is much, much lower. It's probably you get more money by doing the detailed itemized way.
But at least they could get something, even if they didn't do that. And I mean, they could probably estimate.
No. Well, you can estimate. You have to act real numbers. Okay.
You have to know.
Yeah.
Because they know. They know. Right? And they're going to come after you, Bill. You got to be careful.
And that's why I'm going to Bonnie. She's going to do it. And if I do it incorrectly, it's her fault. I'm just going to say Bonnie's fault. Bonnie told me.
No. We have spreadsheets.
I know that.
Bonnie is meticulous. You can tell, right?
I can tell, yeah.
Check.
You're good at what you do.
Bonnie, can everyone itemize? Is that like
you can itemize?
Everyone can.
Okay, but now
does everyone benefit from it?
A lot of people, because the standard deductions are so high now. A lot of people taking standard.
Okay.
And then you know why? Like they have these limits of like how much you can deduct for your state taxes, $10,000 only, right? So it limits unless you have a lot of other things. And then your medical expenses, like you have to have more than 7.5% of your income. You can only deduct over that 7.5%. So you have to spend a lot to be able to deduct.
Yeah. So sometimes people should just do the standard, and sometimes they should itemize.
Most people do. Yeah, and most people do. Most people do standard now.
Okay. So how do you make that determination then? It just depends on...
You do both and see which one is higher.
Oh, really? That's how you do it. Oh, okay. Got it.
Well, I can see right away, okay, because I know, standard is whatever. So I look at your real estate tax, is it very high? How much is it? With what real estate tax is actually maxed out at $10,000. What others do you have?
Yeah.
Maybe you have charitable donations,
Well, that's actually, I was just going to ask you that question. Let's say, and I'm going to take an average person, maybe you give X dollars in church or
that's
religion,
itemized.
And you get a letter from the church, so you have it.
Yes.
And any of those professional, but what about, the kid comes to the door and says they're selling candy, and then 2 weeks later somebody comes from the high school and would you donate to the homecoming parade or something? And we all do that because we're part of the town, we're nice people, etc. What do you do in that situation? So let's say I come in, I show you 2,000 of itemized deductions, and then I say I probably put in another 5, and I'm being legitimate, 500 to these groups in town, church, firemen, police benevolent, etc.
Well, like what I said, the standard deduction is very high now, like $13,000 for single. Okay, so are you going to be donating that much?
No.
Exactly. So it's not going to be easy to beat that standard deduction unless for the really, really rich people, they have another way of getting the tax deduction. Then you need to talk to me separately. They have a donor advised fund. I don't know if you know about that.
Oh, I do.
Okay.
Yeah.
Oh, very good. So they set up their own charity basically. Okay. And they maybe $500,000, whatever.
Right.
They get the current deductions, but they set it up in such a way they get a very smart tax attorney to assist them with it. And they said the money doesn't go to the charity until 40 years later.
Right.
Okay. And then during that time, they manage the money and they get paid 2-3%, whatever. And if it hits like a return of 7% or more, anything over 7%, they get 20%, just like a hedge fund. Okay. But then they can get all this money coming in for 40 years. All right. Yeah. And then if they pass away, the kid can step in and be the managing partner of this LLC, charitable donor advised fund.
Right.
So that's another way. And there's like multiple ways. But that's for super rich people.
I want to be super rich, so I want to be a charity. How about Stacy and I? We open up our own charity.
We can do that.
We can do that after the show. Okay. You're going to stay here a while after the show.
Yeah,
we're going to talk about
set up a 501c.
Stacy and Bill's charity. Okay, we'll set that up, and
we're on our way, Bill.
And
we're
next
on our
year
way.
the show will be really good when we talk about these things. So.
Fantastic. Yes.
So. Oh, go ahead.
I'm looking at the clock, and unfortunately, I'm going to have to interrupt you, Stacey. I think we're getting close. Bonnie, I want to thank you so much. Really, you've alerted us to so many things that we have to watch out for, and that's available. And we're probably just forgetting about it because we go about our daily activities.
A lot of people don't know about it. It's complicated unless that you're really doing it day in, day out. Who has the time, really?
Now, once again, before we wrap up, tell us where your office is and if there's either a phone number or a email address.
516-596-8842 and 2596 Merrick Road, Bellmore.
Wonderful.
2596 Merrick Road in Bellmore.
And then BYAM at ATAX.com. BYAM at ATAX.com.
Perfect. People know where to go to get some help on their taxes. Good.
Just give us a call.
Thanks so much for being with us this week, for saving us so much money and giving us all these ideas. Next year, you'll come back again because we're going to have that charity going.
Yes.
And you'll have to help us file those taxes.
For sure.
Bonnie Yam, thank you again.
You very much.
Bonnie Yam, the owner of ATAX, a tax office located in Bellmore right here on Long Island. I'd like to thank you for being with us again today and let our audience know I'm Bill Horan. I'm here with Stacey Rain, and thanks for listening to this week's episode of My Hometown.
We'd like to get your feedback on My Hometown. Send your comments to WHPC at ncc.edu. Nassau Community College, where success starts and continues. Till next time, this is Bill St. James. And remember, there's no town like your hometown.